Palantir is on an impressive upward trajectory, with seemingly unstoppable momentum. However, the question now is whether the stock is overvalued after this latest surge, and whether reaching $400 or $500 is a realistic possibility, as some are suggesting. I'll share my thoughts on whether the stock is currently overvalued and if hitting those higher price targets is feasible. We've seen a remarkable rise in Palantir's stock, similar to what we saw earlier in the year. It has surged from its previous lows in the $20 range to above $30, with the next significant target around $40. It wasn't just Palantir, many stocks were experiencing similar activity. Some investors managed to get it in the low $21s or even below $21. The prices were incredibly low for many solid stocks at that time. Now, just a short while later, those who bought Palantir are seeing over a 50% gain, which is remarkable, essentially a multi-year return achieved in a very short period. Such gains are possible when you're well prepared, have a plan, set price targets, and have a supportive network to cut through the noise and manage fear. Congratulations to those who invested and benefited from this opportunity. For those who didn't buy then or are still holding, you might be wondering if Palantir is currently overvalued or undervalued and if it's a good time to invest now. Let's evaluate Palantir's situation with a focus on two key points: earnings performance and valuation. Earnings performance. Palantir recently delivered exceptional earnings results. The company not only secured numerous contracts but also demonstrated impressive growth across various metrics. Their free cash flow remains strong, and they've increased their guidance, which is a major positive indicator for the stock. This positive earnings report and updated guidance suggest that the stock's valuation will likely increase. The crucial factor to consider now is valuation. Regardless of how impressive the earnings or growth prospects may be, the stock's valuation needs to be carefully assessed. It's important to look beyond attractive charts and spreadsheets to understand if the current valuation is justified by the company's performance and future potential. While Palantir's recent performance and guidance are encouraging, determining if the stock is overvalued or if reaching $500 is realistic requires a thorough evaluation of its current valuation. When it comes to stock investments, relying on long-term projections and speculative valuations can be misleading. What truly matters is the current valuation of a stock, as this helps prevent buying during hype periods when prices are inflated. This principle of valuation helps us identify when the stock is a good buy, despite others claiming it worth less. Learning to value stocks accurately is crucial. Whether through online resources, courses, or other educational tools, understanding valuation methods is essential. It allows you to independently verify opinions and make informed decisions. In the end, your ability to do your own valuation is more valuable than relying solely on others' opinions. Regarding Palantir, while the recent valuation reset has increased its value, my analysis suggests that, based on the growth rates and other factors, the stock is currently overvalued. Although it has risen from the mid-$20s to over $30, it seems to be priced higher than its intrinsic value at this stage. Palantir is currently overvalued, though not grossly so. This kind of situation is common in the stock market, where stocks can become temporarily overvalued. That said, the stock could still experience further gains, as markets can be irrational both on the upside and downside. It's possible that Palantir could rise to $100, but as a long-term investor, I would prefer to buy more shares at lower prices rather than seeing the stock climb to an excessive valuation driven by hype. Look at Tesla shareholders from 2021, who saw their stock soar to $400 per share but faced significant declines afterward. This is a cautionary tale for those of us who prefer to invest for the long term and avoid chasing inflated prices. As a long-term investor, I'm not interested in seeing the stock stagnate or decline over several years. Your goal should be to accumulate more shares at a reasonable price to benefit when the stock's valuation justifies a higher target, like $100. Building sustainable wealth involves avoiding hype-driven price surges and focusing on acquiring shares at fair valuations. Chasing temporary gains often leads to losses, as history has shown. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. Now, regarding whether $500 is a realistic target for Palantir, predicting such long-term price targets involves a lot of speculation. While I aim to provide factual insights, projecting beyond a year or two becomes speculative. Looking at past performance, such as from 2020 and 2021 to today, it's clear that many models and projections have been off. They suggested $40 was a bargain back then, but reality often defies these predictions, highlighting the difficulty of making accurate long-term forecasts. When it comes to projecting distant future prices, such as $500 for Palantir, it's important to recognize that such predictions are highly speculative. Long-term forecasts, extending 4, 5, or even 10 years into the future, often fall apart because they are based on guesswork rather than solid evidence. As an investor, my focus is not on speculating about whether the stock will hit $500 in the far-off future. Instead, you should concentrate on current valuations. If Palantir only reaches $50 in the future, you will still be in a strong position because your investments are based on solid valuation rather than speculative targets. Your approach should be grounded in valuation, ensuring that even with more conservative outcomes, you are still poised for significant gains. What matters now is whether the company can earn that valuation through consistent performance over time. Right now, no growth rate or EPS projection justifies a $500 target without delving into speculative long-term forecasts. You should focus on acquiring shares at a reasonable price today. Whether Palantir eventually reaches $50 or $500, your investment strategy ensures you will benefit regardless of the outcome. This is what you can control, securing good value now. Don't forget that God, the creator of heaven and earth, is the giver of all wealth. Acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. If you have watched the whole video until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today, your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you, see you in the next video by God's grace. We love you, and blessings to you.